Let's start off with the local currency, 714.25 against the US dollar. We also saw the yuan hitting nice highs today, in fact, post-revaluation highs. So we're seeing emerging market currencies enjoying gains all round.
Yeah, we have, Eleni, and really the market took a lot of heart from the Chinese figures this morning, showing that there's still some steam in the Chinese economy despite some measures that the central bank has taken there. And of course, the Basel rules, the time that has been given to the banks to sort of sort out their capital requirements, the market has also taken some confidence from that. Equities have done well across the globe. The dollar has weakened a little bit across most currencies, and the rand's taken some heart from that.
Well, how long do you expect this to go on for? I mean, we're 714 to the US dollar. Some say that we could get even stronger from here onwards. And again, I allude to the fact that we cut interest rates last week, and this not being a reason enough for investors to go to even higher yielding countries, our real yield is still relatively attractive.
It is, particularly as the Governor Marcus last week, she adopted quite a dovish tone, which the market took as a signal that our bonds could in fact hit a little bit lower, and perhaps there's reason to cut rates sometime in the future. And as a result, capital inflows, they haven't abated at all, and nobody's really taken much money off the table. The rand drew hard from that, and right now, Eleni, we at quite key technical levels, because a daily and weekly close below 715 could very well signal a new trading range for the rand.
Well, David, in terms of volumes, when it comes to equities, we have been seeing a drop-off in volumes, especially towards the end of last week and, of course, on Monday as well because of the Labor Day holiday in the US. Tell us about what the volume situation and the liquidity situation is like when it comes to the local currency. Are you seeing massive flows today?
Nothing dramatic. Of course, at these levels, we are seeing some very good importer demand, but that's been satisfied by supply coming out of Europe and offshore broadly. So not a huge amount going through the market, but certainly there's a lot of interest from offshore. They continue to buy rand, and that's being supportive for the currency. And everything is playing into the rand's hands at the moment. Commodity prices are doing well. Precious metal prices have done well. Global equities are doing well. Bonds are benign. And that's all leading to the flow that we're seeing currently, and everything supporting a stronger rand.
Let's touch on China and the fact that the yuan is starting to strengthen extensively. The US is still complaining that it's not happening at a quick enough rate. What is this going to mean for emerging market currencies as a whole if we do start seeing China's yuan strengthening extensively from here onwards? Do you think that is likely to happen down the line?
Yeah, potentially that's got very good implications for emerging market currencies. They've spoken about a stronger renminbi or yuan in the past, and that appreciation has been slow. But I think there is a stance developing in China at the moment that they need to stimulate their own domestic demand, because they can't just feed off exports going forward, because of course that creates immense risks as far as their currency reserves are concerned. A stronger yuan will certainly play into that, will stimulate domestic demand, or will assist to stimulate domestic demand. So I think there's a realization coming out of China at the moment that the yuan can strengthen further. In fact, that they need to strengthen it further to stimulate that domestic demand and hopefully readdress some of the imbalances that do exist in the global system.
David, as we were alluding to earlier, we know that a lot of investors are rotating out of US treasuries, which is obviously seen as a safe haven, and going into emerging market bonds. Similarly, as we also mentioned that equity markets here in South Africa haven't been performing as well as the bond market has. Some say the South African bond market is going to start overheating at some point, and investors should be cautious. Do you concur with that?
Eleni, I think as long as inflation is not showing any threats, and we've seen some potential threats to that inflation number as far as government salary hikes are concerned, above inflation, and the strike action that we have seen. Yet inflation remains well controlled at this point in time. So I think until we see inflation ticking up, I don't see any danger signals for the bond market. We also have to remember that the US Fed is piling into the bond market and buying up government debt as they need to roll over the stuff that they did when they tried to stimulate the economy after the 2008 debacle. So as long as those things remain in place, I don't think there's much threat to the bond market, and we'll just have to watch those things.
David, in terms of what we have been seeing on a global level, the double dip talk still seems to be on top of many investors' minds. A lot of people still have quite a bit of fear when it comes to potential growth scenarios on a global level. Do you think that emerging markets are going to be exempt from this?
Well, I don't think they're going to be exempt, Eleni. As things play out at the moment, the threat of a double dip has receded over the last couple of weeks, and what we're seeing now is a view that the developed nations are going to remain in the doldrums for some time to come. That's going to keep interest rates in those countries low for an extended period of time. Of course, we have to be aware that risk aversion kicks in when there's a big sell-off in equity markets. The market will always be looking at that, or the potential for that. But the risk of a double dip has receded, and really it's the emerging markets from China and other emerging markets right across the world, Brazil, India and others, including South Africa, that are holding the global economy up at the moment, and that's warding off the threat of double dip at the moment.
Because right now as well, we haven't been seeing the euro coming under the same pressure that we saw at the beginning of the year at the height of all the debt worries that emerged from the so-called PIGS countries. Do you think that confidence has been restored in the euro, at least for now, and how's that going to affect the rand?
Yeah, I think Europe has certainly done a lot of work as far as their fiscal imbalances are concerned, and something that's coming to the fore now is that America's done very little. In fact, they've added to their fiscal woes, and Europe is continuing to tackle that problem. So gradually over time, I think the focus will shift to what the US has to do, and of course, they're trying to stimulate their way out of trouble, whereas the Europeans have chosen to cut spending and to reduce those budget deficits. So I think developed nations' currencies are all going to remain in focus, and really it's a trade-off between who's in the worst situation at this point.
Well, looking at the gold price, because we're only around $15 away from the all-time high that was hit earlier this year, what are your prospects for the yellow metal? Because it's still deemed as a safe haven asset. We still have very low interest rates on a global level. So in other words, the cost of holding gold is cheap, so it does make it attractive. Do you expect more gains to come through for gold?
Yeah, I think for me, Eleni, personally, that my view is that gold has still got some upside potential. 1265 is the all-time high, and as you said, we're $15-20 of that level, and certainly that remains attractive at the moment, and that's one of the things that's being supportive for the rand, and I certainly think if we get above that 1265 level, we can easily head up to 13.5, 14. But like most things, everything's somehow coupled or linked to something else, and for the meantime, in any case, gold is deemed as a safe haven.